All right, well, the markets are open. It's a Monday morning. Thanks for joining us. I'm Marlin Bohling with you, your tour guide to the ag commodities. Did you hear that we had some overnight export business? Yes, we did. And we didn't find out until about 8 o'clock Central Time from USDA, but we had a couple of sales to mention. One was for soybeans. It was 132,000 tons, and you know, they were specifically for China this time. And they were for new crop delivery, of course. Soybean meal, 183,300 tons, and they were sent to the Philippines. So we thank them for that business. That was also for new crop delivery. Pretty bullish, you would think, for the market, right? Well, you be the judge. Let's take a look at what the market is doing. It has been kind of a rocky road here this morning. Let's go to corn first. Down 15.5 cents on September. We're at 505.5 right now. And we had a high of 516.25 overnight. That'll just give you a clue as far as how this is trading right now. We're about 2 cents from our low of the day. December corn down 15.5. We're at 514.75, 2.5 cents off of its low of the day. Well, with all the export business overnight, what are soybeans doing? Well, it goes to figure, doesn't it, that you'd have September down 36.75 cents. We're at 13.9625 on the low of the day, and, well, say goodbye to that 14 handle. They blew that thing out this morning. November soybeans now down 31 cents at 13.51.5, and that's 4.5 cents from our low of the day. Look at the high, 13.75.5 overnight, and we're off of that now by 23 cents. Big wide spreads again in the soybean trade. Now, with that sale of soy meal overnight, you would think it'd be higher. Nope. You have September down $5.70 at 427.90 per ton, and had a high overnight of 432.20, and now we're at 427.80. How about soybean oil? Any strength over there? No. You have September down 197 points at 63.67 this morning. In Chicago, September wheat, we're losing 27.25 cents today at 677, just a penny from our low of the morning trade, off of our high of 703 last night. Well, they went through that $7 mark like a hot knife through butter. You have September Kansas City wheat down 26 at 830.25. That's 28 cents off of its overnight high. In Minneapolis, you have September wheat going down 24.5 cents. We're at 871.5, just a penny and a quarter from our low of the day there, off of our overnight high by 24 cents. In cotton this morning, is there a plus sign? There's one. You have December 87 points higher at 85.13. Had to go to the very end to find a plus sign. We have Chris Swift with us, and he is with Swift Trading, of course. He is based in Nashville. All right, Chris, man, that's a lot of negativism until you get to the cotton market. But if you could, can you explain what's going on with this grain market this morning? I mean, is there that much bearishness just on changing weather forecasts?
Well, I think there is, Marlin, and a couple of things that we can notice. The first thing is clearly that the weather has changed when we got more rain coming into the system. We're going to see a little bit of this heat dome start to subside next week. But if we go back to USDA's planted acres and we look at the corn market and look at the bean market, the way they both are currently priced, we are in a full carry charge in the corn market. We got 4 million more acres than what we thought we were going to have in the corn market. And then in the bean market, we have a totally inverted market where the spot month is still trading the highest right now, showing us that we're going to be a little bit of short beans. But with us, South America still having a lot of beans, probably going to plant even more beans coming in. We know that their infrastructure to get the beans from the field to the port is increasing every single month and probably going to continue because that's the way that they have probably the biggest amount of delay is in that transportation, getting it from the field to the port. So I think going forward, that weather change is probably the biggest thing that we've seen so far.
Well, we've been talking about this basically all morning long, but it seems like, and again, I know there are places that have missed all the rain. I mean, even my home stomping grounds are a key example of that. But a lot of areas got more rain than what the weather models had predicted. And that happened again this morning in the western part of the Corn Belt, where you had some really big rains where they didn't expect it. And they're calling for a wet period the next 10 days. If they get a lot of rain over the next 10 days, is that going to pretty well finish off the corn and soybean crop for this year?
Yeah, I think the corn's pretty much already done now. We're going to start chopping silage this week. When we get into this last week of probably August, if that rain has come, that'll pretty much do the bean crop from that point forward. And looks like even still with the short of acres, we got a fairly good bean crop. USDA is currently still at 52 bushels per acre. They could come down just a little bit. That might keep beans firm, and more likely than not, it just keeps them in this inverted carry charge than it does anything else. But now that we've dropped back below the 14, I would imagine farmers are going to get pretty serious about trying to market some inventory now.
All right, well, I'll tell you what, we'll take a quick break here, then we'll come back, and I want to get your thoughts on this livestock trade as we open up a new week. Our guest is Chris Swift. We'll be right back. All right, we are talking with Chris Swift in studio. He's with Swift Trading, and he's based in Nashville. Okay. I was asking earlier in the broadcast here, Chris, and I want to get your thought on this. What happened with the cash cattle trade last week? Here we are. Today is the final trading day of the month of July. And we ended up last week in the cash cattle markets, and there was like nothing going on. And we waited until the session ended on Friday, and I still didn't really hear of anything. Now, this morning I come in, and it looks like maybe there was just a little bit of light trade. But how did they do that? How did they go through a week without any cash trade?
Well, the formula, they buy a lot of cattle out front, and that's based upon the formula. So they have forward contracted cattle that can come in so they don't have to consistently buy every week. And that's where we are right now. I think we're right at a turning point in this, and that being, we know that we've got short of inventory, but we're also seeing other impacts on the beef market and on our consumer. And just this weekend, they ran a pretty good special on the nightly news about the increase of gasoline prices and how that's impacting the consumer. And just about everyone that they interviewed on that mentioned something that they were going to have to do without now that they had higher gasoline prices, still higher food prices. So as we move forward, there is margin being lost because all the prices have elevated now, leaving less room in between them. So now the packers are tight on their margins, and they're going to try to do things like slowing down the kill in order to either A, slow down the price that they're paying for the fat cattle, or boost the price of the beef market, one of the two.
All right, on the hog side, we opened up weaker this morning. What's that all about? Are they just bumping their head up against overhead resistance, or do they have more upside yet?
I'm not real sure because we do know that there is a huge basis spread right now. The index is trading well over 102, 103. Some of the back months are trading 80 and 90. So I'm not real sure where today's weakness came in. Maybe it is just a sign of everything else having been weaker, that we saw the bond market still weaker, so we know that the price of money keeps going up. Crude oil was higher again this morning, so maybe again it's just the aspects of everything being higher kind of pushes out into the future that things may not have as much robust demand as what they've got right now.
Well, I tell you what, let's take a look at our current prices and we'll see what's going on in our livestock market with our quotes provided by bar chart here. Okay, so in live cattle this morning, we are starting a little bit weaker. We have that nearby August contract down 32 cents. Now we're at 177.82. We have October down 52 at 179.07. How much time do we have left trading the August contract, in your opinion, here?
Well, first notice date comes out on next Monday. So with that in line, you've got this week to trade it. And there may not be too much delivery simply because of the price discrepancies. So it'll be interesting to see as we get closer to Friday, see whether or not we're going to have any intent to deliver notices.
All right, so October down 52 at 179.07. This morning on the feeder cattle side of things, we have September up 117 at 250.15, so it's getting a little momentum there. And on the lean hogs that we just talked about, they're coming back a little bit. October now down just 80 at 84.22, off its low by about $1.15. Well, thank you, Chris. Appreciate all the help this morning. Chris Swift of Swift Trading in Nashville. Christina, back to you.